the Doc and Eric Dubin with the SD Weekly Metals and Markets wrap. Well, after capping all week just under a key level, gold and silver were smashed early Friday morning. Actually began just before the COMEX open, and then gold and silver declined on heavy volume on the COMEX open. Gold trading almost down to 1290 through the critical 1300 support level. Silver trading down to I think 1945 was the tick low in silver. And then gold spiked back up and recovered most of its losses on the news that Ukraine had attacked an armed Russian convoy. Stocks plunged and gold spiked on that news. We saw silver spike a bit here Friday, but wasn't able to hold on to the majority of those gains like gold did on the risk of escalation in the Ukraine with Russia. So what's your take here, Eric, on the trading this week? We also had today, Friday, August 15th, the first day that the London silver fix has ended, and we were just chatting a little bit before the show that you think that had something to do with the smash in the COMEX open this morning.
Yeah, I believe that that's possibly something that's justifying a cartel raid. It definitely was a cartel raid, and what was in the mind of the cartel, it could be pointing to lots of different things, but chief among them, most likely, was painting the tape in advance of the ending of the silver fix, because a lot of people were building expectations that, oh, the fix is going to end, and that therefore we're going to have a more free market and prices will move up as a result, which is something that we've talked about pretty extensively for months now, that the majority of that kind of thesis is really off base, because primarily the principal tools that the cartel uses in their toolkit to manipulate prices are the dumping of large numbers of contracts in short periods of time, particularly when the market is thinly traded, and also the leasing into the market physical gold from central bank stocks and other vaults and so forth. So all the while we've been trying to caution people to not get too excited about this silver fix thing, but nevertheless there's been a lot of excitement and expectation that the absence of the silver fix system as it was running for 17 years or something, and being part of the manipulation story in the last decade plus certainly, but it's not really that big of a deal. And the fact that we'd see gold and silver lionized and attacked this morning, we should also point out, was well before the news about the Ukraine army attacking the supposed military convoy in Russia. And we should back up a step, too, because I discovered early on this morning that I had published a story earlier this week over on the News Doctors documenting how, in fact, an earlier example of a claimed military incursion or escort by Russia was just nonsense. It turned out that there was a claim of 143 Russian military vehicles crossing into Ukraine that was posted to the Facebook page of one Aleskar, let me back up a little bit, Aleskandar Griginets, who is a member of the Ukrainian parliament, and none other than the Minister of Internal Affairs, Arsen Avkov, in the Ukrainian government, declared that this report was, quote, "It's a fake, why are you replicating it?" in reference to the media reports that dogpiled out of Ukraine, trumpeting up the fact that Russia had brought in 143 military vehicles. I mean, you can't hide something like that. That's a really big move, but all in all, it seems like that this was nothing more than just a propaganda report. And it's incredibly fishy that this hit 2 days before this Thursday evening / Friday morning report about this so-called military convoy escorting in a humanitarian convoy by Russia. Needless to say, that report had a big impact on the markets, and the treasury bonds were moving down as people were rushing to safety trade. Gold did pop back up, silver popped up back, but and in fact oil as well jumped higher after having gone through quite a big decline over the course of the last week, which we'll get to in a moment. But tying all these pieces together raises more questions than answers, and something truly does smell. And it's going to take a little bit more time to figure out what happened in Ukraine, but this really does reek of yet another psyop on the Ukrainian government's part. There you have it. We'll be reporting about this on the weekend at the news doctors as we get more information.
All right, and the big dip, particularly in silver, with silver heading down to around the 1950 level, the retail demand has once again exploded. That we've seen at SD Bullion. It really began on Wednesday. It's continued through the whole second half of the week. And today here on Friday, we've had the most sales volume, both in ounces and number of orders, I think in a single day, at least in the last 6 months, no question. And we've seen that really across the wholesalers and the authorized purchasers. Their volume and the amount of retail silver sales has exploded the second half of this week. We haven't seen too much of a change in premiums. I think it would take a week or two of sustained buying on this level for the coin buildup that's they've been building over the last 2 to 4 weeks to sell through, as there's been plenty of coins available on the retail investment market here in the U.S., but it's a good healthy indication, the type of physical demand we saw the second half of this week, and particularly today on Friday.
Yeah, and it'll be telling to see what happens with, say, junk silver and its availability, because that's always an indicator of the leading edge of people accumulating for fear of big market turmoil ahead, and then also just premiums in general for silver eagles even. So another aspect to all of this is what appears to be a rising consensus among at least a minority of hedge fund managers and speculators and so forth, of the possibility of a deflationary burst, a crash. That, maybe it's a pre-crash, as I described it to Dr. Janda last weekend when I was on his show. But I've been talking about this since mid-July and noticed trends in the difference of the way behaviors and markets are being expressed, particularly with oil. And Dave Kranzler put out an article today that was a fantastic summary of what's been going on in this last week. And there definitely is a lot of fear in the background about some kind of crisis underneath the surface manifesting itself, and we can see that in the pricing of markets with the spread between various yield instruments and also oil going down and culminating yesterday, slicing through, I believe it was 95 and change, and that trend was in place for a number of weeks. And it speaks to the probability being priced in of a deflationary crash. And again, it may not be quote-unquote the big one, because in the big picture I'd still default to the fact that, as we discussed with David Morgan and with Ferguson, that the central bankers can, at the stroke of a keyboard, create as much liquidity as they so desire, particularly with the hidden mechanism of creating currency swaps, where the Fed will create a ton of credit and exchange likewise tons of credit created by the ECB, which can float the financial systems of both sides of the Atlantic, yet at the same time not having a huge impact to the actual currency cross rates in the FX market. So there's when you look at the 10-year Treasury bond, and now it closed today at 2.34% yield, and that's down from the beginning of the year at 3.04% or so. And that's a huge move, and it's the lowest it's been all year, and it speaks to people positioning themselves in advance of some kind of, as Dave put it this morning, an economic Armageddon scenario, a deflationary crash. And in the long run, we're going to probably see a heck of a lot higher levels of inflation as the central bankers of the world respond to these kind of things, particularly when we have an episode like, say, for example, last year when Cyprus hit. from April onward, there was quite a bit of liquidity being pushed into the market. So it's just another thing that people need to put on their radar, because there's plenty of blips going on that are signaling that this is a significant worry. And then when you add on top of that the economic backdrop in the United States with the gross domestic product reports being significantly revised downward, and then when you consider the level of lies and propaganda that comes with our statistics, and the fact that statistics that are reported by the government now smell terrible, even with their massaging of the numbers, you really have to scratch your head and wonder just how bad things are. And then another report too today came across at Zero Hedge, where they were talking about Chinese power consumption falling to the lowest in 16 months, where 10% down in Shanghai year over year, and as much as 22% down for electricity demand in other portions of China. And with electricity, it's a really hard statistic to manipulate. It really is just prima facie evidence about what's going on with an economy. So, there's definitely a lot of global downturn happening in response to what possibly is linked to a large measure to the tapering that's been going on with the Fed, and just overall slowing down of the economy, because as we kind of seen historically, when the central bankers of the world and policymakers put out a lot of liquidity attempting to have a wealth effect drive economic growth, the amount of bang for the buck, so to speak, has declined consistently for decades. And there's also an analogy that conventional economists speak of when they speak of the multiplier effect in terms of fiscal policy, and how, in fact, you can look at that over the last 2+ decades and see that the multiplier effect is falling apart as well too. More and more stimulus, be it fiscal or monetary, is required to actually get this Ponzi, over-leveraged, over-financialized Western economic model humming on all 8 cylinders. And so all of this speaks to just the general kind of stress that we're seeing in the economic backdrop, and the drum beats of war are in part linked to that, because the old saying goes that when all else fails, quote unquote, they take us to war. And I think that's part of what's going on here. But the war and the sanctions also curtail in the near term economic activity. And the European Union and Germany in particular are now backpedaling a little bit when it comes to sanctions against Russia, and on and on and on. So, I just went on a big epic rant here, but I think all of these subjects are worthy of everyone's attention, and so that's why I bring them up.
Now, the other story that has caught the nation's attention this week, both in the alternative media as well as even the mainstream media, is the riots that have broken out in Ferguson, with essentially a martial law type police state response to it, after Michael Brown was shot and killed with the altercation in the convenience store. But it's really...
Well, he was walking down the street afterwards, and this
right.
This video surveillance footage came out today, whereas it was clear that with witnesses and video testimony that he was just walking down the street. So maybe he was involved with something. Who knows? I don't know. It's another one of these things that, having just broken today, it's got to take a little time to review it before we make hard conclusions.
Really, it's what a lot of our readers and listeners have been warning about for a long time, just the escalation of the militarization of our police forces. Several reporters were arrested temporarily during the ensuing chaos, and again, we've just seen massive looting and riots and chaos in Ferguson, Missouri.
Yeah, I believe 2 reporters were eating in McDonald's and just minding their own business, and police came into McDonald's and arrested everyone there, including the reporters.
Pretty scary. Not what the USA used to be known as. I've received emails from precious metals contacts in Australia with articles saying that I thought this was America, and showing stories, and the same thing from the UK and other places, that people around the world are asking us what's going on. This isn't what you were founded on, what you're supposed to be all about there in America.
Well, it'll definitely be an interesting weekend. A lot of news will be hitting the news wires, and Monday should certainly be interesting as well, too, when it comes to settling of how the markets in London are going to process with the silver fix moving to an electronic system. And we did bounce off of general support areas, and it's no surprise that demand was high throughout the week, because anytime we move anywhere near that $19 level, people come up and purchase. And there's definitely a lot of people waiting for the market to come to them for their purchases of insurance. But in the grand scheme of things, and though we've said this, almost from day one of our broadcast, the bottom line is that if one looks at precious metals as a requisite insurance position, it really doesn't make much difference as to where one buys. I mean, we went up to 22 and change right before we were about to break out and move higher last couple of weeks back, but here we are now lower again. But we're only talking about a $3 difference or so, and then if people haven't exposed their portfolio to having some kind of a hedge, whether it's silver or gold or something else, it really, now's the time. Because if we do have a deflationary crash, which we spoke about earlier as the market prices that kind of possibility in, there will likely not be metals available for purchase. That's what we saw back in 2009, and at this stage, with the far greater consumption that's going on in Asia and the depleted vaults in the West, it's pretty much a foregone conclusion that the same pattern would repeat if we had that same kind of deflationary burst that took markets down and had people clamoring to obtain true physical in hand. So the message that we can't stress enough is that if you haven't given some serious thought to precious metals, now's the time, more so than ever.
And for our listeners who might be newer to the precious metals market and didn't purchase in 2009 and didn't experience that crash, and they've just looked back on a 10-year price chart and seen silver traded at $8 an ounce, as Eric alluded to, you couldn't buy physical coins and bars anywhere near that level at the time. I remember into the peak of that smash when silver traded down near $8 an ounce. I believe the lowest you could find it in physical form was somewhere around $14 an ounce. It was well over 50% premiums, and I remember at the time looking at 1,000-ounce COMEX bars, and I believe they were over a $3 an ounce premium for the retail buyer. Not those who were trying to stand and take delivery on the COMEX, but those who were buying from a retail outlet trying to acquire physical silver that way. There was also 4 to 6 to 8 week wait times, so not only was the premiums exponentially higher, there wasn't any silver available for immediate delivery. So as Eric's alluding to, if we do see a major deflationary crash in the market, for those newer to the market, that doesn't necessarily mean you'll be able to acquire physical silver at the futures prices that are flashing on the screen. All right, we'll wrap this week's show here today. On a positive note here as we close out the week, silver did hold at 1950. There's been several attempts really to take silver down, and the 1950 level continues to hold, and gold refuses to trade much below. I think the last low was right around 1288 if I recall, and didn't even get down that low today. So even though we did break 1300 in gold and we're trading back below $20 an ounce silver, that 1950 level still remains strong support in silver, and the 1290 area continues to hold in gold, with again gold popping back above 1300 on the day as well. So as Eric mentioned, we'll keep our eyes on the news headlines flashing over this weekend. It should be a pretty interesting weekend, and we'll see how silver can trades into next week with the London fix history and the first full week of trading without the London fix. So for the Doc and Eric Dubin, thanks for tuning in to this week's SD Weekly Metals and Markets.
Those individuals who are in charge of monetary policy around the world, I think they're very much aware of what is coming. When I've asked Federal Reserve Chairman in the committee about this, they never said, no, that's not going to happen. They used the word orderly. As long as it's orderly, it seems to be okay.